and David and Debra and Habib. Is Habib here as well in the room? A quicker discussion. Please come and join. We are going to have a quick conversation about my favorite housing investment and why. And my colleagues thought it was a bit of a frivolous topic for for this kind of a forum. But the point is that that is the thing that drives you, right? Is an investment that works one way or another. I'm presuming a favorite investment is one that's worked. And what we're looking for is for cases that come and have a seat, Debra. For cases of examples. I have said to the panelists that if they can't think of a housing one, that's a pretty good lesson. In which case, no, I think that's plenty. It's just the four of us. I'll go there. It's fine. No, I can do that. I'll go there. So we're going to go quick into this conversation. We have Debra Erb from DFC, the Development Finance Corporation, who's flown here from the United States, and she's a great friend of the AUHF, also a member in her personal capacity of the AUHF. We have David Ashiagbor from the African Development Bank, finance sector specialist, and funder of our conference today. And we have Habib Hann, Thierno Habib Hann, the ND of Shelter Afrique. Please tell me, I'm going to start with you, Debra, your favorite investment, your favorite affordable housing investment, and why?
This is in Africa, right?
I'm asking for your favorite, but the why is the more important, actually.
Oh, okay.
Yeah.
So my favorite of all time, which actually we lost money on it. So I was going to talk about CRH, but I guess I'll talk about Honduras instead. Because Honduras, what this is, I think it's topical for what everybody's thinking about today. First of all, it's a project that was targeted to very low income buyers, families. So these were people who were living in slums, who were either informally employed or were working for a local factory, local in the maquiladora industry. The sponsors were Honduran Americans. They had very strong presence locally, but they also had a very powerful mission to support low-income families and support economic development in Honduras. So point one, they were very committed, very mission-oriented, and that was extremely important the way things played out. Secondly, when they first started out, they had a very strong U.S. partner who ultimately left. And so point number two, we love U.S. partners to be involved in projects overseas, but a lot of times U.S. partners, they're a little skittish. They get nervous easily, and they find ways to get out of the project. So the other reason I really love this project is when the U.S. investor backed out, the local partners stayed in there and they saw this thing through to the end. The characteristics of the project were low income, as I said. It was supposed to be like 10,000 houses. I think we ended up building 3,000. The price of the houses was around $10,000. They were 35 square meters. There were some smaller. So 2 beds, 1 bath, very simple concrete block construction. Built on a land site that was right near a factory, so the location was great. The problem was that in Honduras, there's no mortgage system. There was really no financing mechanism for very low income buyers. There was supposed to be a subsidy program that the IDB, the Inter-American Development Bank, was going to finance. It never came through because the government couldn't come to agreement on the implementation of the subsidy program. So we had to figure out a way to solve both sides of the equation. We wanted to help them build houses, and we needed to help them finance them for the buyers. So we put together a lease purchase program. It was a 25-year lease purchase program. The sponsors developed, they built the houses, we moved people in. Um, they spent their own money on schools. They talked the municipality into bringing a police station in. They had common, parks and common areas. They had a clinic. They had a commercial area for little shops, bodegas and businesses. They had special units that were designed for, live work type, downstairs your store, upstairs your living. Um, the school was amazing. They sponsored the school in partnership with the municipality. A lot of community engagement. They worked with the homeowners to develop a strong homeowners association, which actually I think kind of became problematic for them because when things started to go wrong, their residents had, a very strong voice in what they expected the sponsors to do to fix the problem, and what they expected OPIC/DFC to do to fix the problems. So what I love about it is the people built their own community. They had decent houses. They had good services. They had nice living environment. They had everything they needed to build a community, and they were building it. We lost money because the IMF went into Honduras and forced them to float the currency. And so all the assumptions we had made about with the Honduran currency versus the dollar went out the door. so people couldn't afford to make the payments anymore, and the whole thing had to be restructured. That said, those guys are still there. They're still working with that community. They're still taking care of the residents. They're still overseeing the homeowners association. And that to me is what really makes that project work, is the commitment of those sponsors and those developers to the families they worked with.
So that was what I was going to ask you, is like what happened? And I guess what you're saying is that the arc of the investment might be longer than the cash involved, right? There's
Yeah.
and what happens over that time.
Yeah.
The other thing I hear you saying is that you like a really good problem.
Believe me, yeah. I mean, we wrote it off. We wrote it off. The guys, our borrowers said, you shouldn't do that. You shouldn't do that. We're going to get it, we're going to make it work. We're going to make it right. But, financial institutions have their own ways of doing these things. And so, we backed out. But the core is there. And I think
Yeah.
that given their commitment, they will get the 10,000 units built eventually.
That's great. So the core is there. Okay.
So, tough one. Can you hear me? Okay. So, it's a tough one because I have many clients in the room. I have many clients in the room, and I also have the clients at the stage. And I think what I wanted to do was to approach the question from a variety of perspectives and bring out a couple of critical things that we as AFCD look for in a good investment, whether it be in housing or whatever. We are a founding shareholder of Cell Therapy, and I think it would be remiss of me not to mention that, simply because of the role that Cell Therapy plays in the affordable housing sector in Africa today. So for us, Cell Therapy is a good investment because of that. We have created something that has built partnerships between, we've spoken a lot over the past 2 days about partnerships, about the role of government, the role of the private sector. Shelter Afrique embodies all of that. And so for us, it's not that Shelter Afrique removes the concern about affordable housing, but we have a specialized vehicle that can deal with that and that we can support and that can, continue to be focused on that. So Shelter Afrique is a good investment from that perspective. I have another client in the room who actually, and this investment has nothing to do with housing. Okay, they were the first private equity fund specifically focused on gender. So looking at investing in women-owned businesses and businesses that work with women, or I suppose they call them women-empowered businesses now. Right. Now, this was, what, 5, 6 years ago? I know they're all the rage now, but it was the first, and we were the first investor. And not only did we invest, we actually supported them through to first close. So taking them to roadshows, introducing them to investors, supporting them with those discussions. So for us, why was that a good investment? Because beyond the money that we put in, right, we were able to use, we have this terrible term that we call our convening power.
You're convenient.
Convening power.
You're convening power.
You know, to bring others to the table. But I think beyond that, it also demonstrates the power of partnerships. Because when we're going into projects like that, AFDB will never fund more than 25% of the total cost. So it's about how do we leverage our capabilities beyond the cash that we have to bring to the table to begin to solve some of our continent's most pressing issues, and through that, progressively get those issues mainstream, right? Like we've done with the Gender Fund. I don't think today there is a private equity fund in Africa that goes out fundraising that doesn't say gender as a focus, or that you would actually even begin a conversation with a private equity fund that didn't mention gender.
David, are we allowed to say who?
I think she's allowed to stand up.
There we go. Alethea Capital?
Alethea Capital, yeah.
Okay.
We also have a number of other clients in the Family Home Fund was one. And what we're doing there with them is, again, for a small amount of money, allowing them to de-risk and therefore enter new markets. And the deal there is, look, as at today, these guys, this target population is perhaps 2% of your loan book. Okay, we are going to help you either de-risk or give you the liquidity or allow you to extend to them over longer tenures with a limited amount of money. But the deal is, when we come back in 5 years or whatever it is, we want to see that your portfolio of this target group has moved from 2 to 5%. So you begin to mainstream. And I think yesterday there was a bit of a discussion about about our role as DFIs, right? And so we do also work with governments, and I'll give you a couple of examples. Right now, we are working on a transaction with the government, which is about lending the money to capitalize a specialist DFI. It's not in the housing space; it's in the exit space. So we could definitely do that for housing if the government asks us to, and if it were the priority for the government. So, you know, that needs to work. The government can either use the money that they borrow from us at preferential rates because of our stipulation to either capitalize or on lend to the specialist institution.
I just saw a specialized institution raise her eyebrows.
I think that's a good thing.
It is.
And I think at the higher level, when we look at sort of the conundrum that governments find themselves in terms of, you know, I have all these developmental needs, I have the SDGs to meet. What do I do? How do I raise the money? We've actually done quite a few guarantees to government this year that have allowed them to raise money on the international capital market at much lower rates and for long tenures than they would otherwise have been able to do. Right. And those money, those transactions have supported either SDG loans, sustainability bonds, or things of that nature. So behind that, behind each of these investments, there is a government plan which will have to be verified, right? Because it's part of the terms of the bond that cover all the SDG sectors, which include housing, right? So then supporting the government that way. So I think for us, it's not just about the money. It's a lot more about the impact and how can we create structures, institutions that are catalytic and that move the needle, so that the impact for us is not just the 20,000 housing units, which is very nice, but we want those 20,000 units per year to be able to continue without our support. So that's number one. Number two, we want to crowd in partners. We want to crowd in partners, be they state, be they government. Number three, we want to work with the private sector to actually focus on and see the business opportunities that there are in serving the underserved. So I think I'll stop there. Thank you.
I mean, what you've said just now, I think, as I'm hearing from both of you, that development finance institution, the development is the first word. Hey, yeah. Habib, let's hear from you. You've got sort of a lifetime of investment. I'm really curious to hear where yours come from.
The good thing is you know all of them, right? It's not the first time we're here at the AUHF. It's been many years we've been collaborating with Kecia and the team. First of all, I really need to recognize here AFDB for the nice words. You know, the support to Shelter Afrique Development Bank now has been tremendous over the years. So this is a 40 years old institution created in 1982 with African countries being shareholders. Today we have 44 African countries that are members and shareholders, including the African Development Bank, which was the anchor investor in Africa Reinsurance Company, also based in Nigeria and Kenya. So we are also a development finance institution set up by AFDB back in the days to focus solely on affordable housing and urban development, right? So we talk about urban infrastructure, social infrastructure that's needed for having a dignified housing. So we also have a catalytic role in the space, in the particular sector we're working in, right? So as AFDB, my brother here just rightly said it, you know, AFDB is playing a catalytic role across all industries. Now, we were created to also play that catalytic role specifically in the affordable housing sector and urban development across our African nations, okay? And this was a vision also that came from our founding fathers after independence days. Many of these housing institutions post-colonial time basically disappeared. A lot of them had issues, etc. So we had to rebuild this. So Shelter Afrique was built in that purpose. So the one particular initiative that I'm going to talk about here is a specialized sort of affordable housing. This is more of a student housing initiative. So this institution is called ACON. ACON is based in Nairobi, in Kenya. And I'm sure a lot of you have heard about ACON, but you most likely don't know that Shelter Afrique Development Bank is the first to finance ACON back in the days, when ACON was purely an entrepreneurial institution. So our role was really to seed, to finance this entrepreneurial initiative, because we believed and trusted the team and the leadership behind that institution, out of the passion they had and the little track record back in the days. We're talking, more than what, 15, maybe 20 years ago. And this is basically an investment that today we're seeing the impact in the student housing space because they're the largest providers of student housing today in sub-Saharan Africa. Okay? And they're growing fast. Kenya is the first country where they've been developing these student housing programs. We started with just a small amount of money. I mean, it was $4 million in one particular project in Jogo Road, and then another $4 million in another place called Outer Ring project in Kenya. So this came up through the liberalization of higher education in Kenya, right? So you had a lot of universities that were being created, and obviously we knew that demand was going to be there to basically have housing accommodation for the students. And we needed to come up with more creativity in structuring because this is different from build to sell, which everybody knows. Now you needed to structure such investments in a cash flow based model and thinking about occupancy rate and the fact that your income is not going to be, the same over the months, right? So, I think it was important for us to get involved there to play that catalytic role. But if we were really risk averse, like most investors, we were not going to make that investment possible. And today, you perhaps would not have an acorn. And now this institution is also the first to issue a green bond in Kenya. And they actually just won the most innovative bond accolade in EMEA region 2021 awards with a $40 million green bond issuance guaranteed by Garanco. This has been cross-listed in the LSE and the Nairobi Stock Exchange as well. And the objective is to provide clean, safe, affordable green accommodation. So just to say that the catalytic role that Shelter Afrique played many years ago is reaping fruits today. And this same institution is about to create a platform on which we're going to accompany them to basically develop more affordable housing across the continent. And if you allow me, just one last little point I wanted to make also is really, we have a lot of investee companies in the room, right? And I really also want to make sure, because this is on the supply side, right? But more on the demand side, we definitely need to recognize the importance of mortgage refinancing companies. And we have many of them in here that Shelter Afrique also seeded and invested in, right? We have the likes of TMRC here, Tanzanian Mortgage Refinance Company, Kenya Mortgage Refinance Company, KMRC, CRH in West Africa, founded by my good brother there, Christian Agosa, who's in the room. So all these institutions have played a catalytic role in transforming the mortgage finance industry in their countries because they are refinancing institutions that provide long-term funding and issue bonds in the local capital markets in local currency to make housing affordable. So these are really transformational institutions in our African countries. So Shelter Afrique has provided equity to get them started and help them also accompany them throughout the bond issuance process in the capital markets. In the case of CRH, one interesting thing to note is that CRH was one of the first, it was the first actually institution to issue a 15-year bond in local currency in West Africa, even longer than any government in the West African region. So I think this was a transformational sort of initiative. So I'm just going to stop there and end up by just saying that I would love to give so many examples. In India, another amazing example, but just to say that our focus going forward would be to be able to finance more low income and informal income segment of the population, which we have invested a lot in India, for instance, the guys like Avas and others in housing finance companies in India. Thank you very much.
Thank you, Habib. I mean, this is why I love this community. There is such collaboration and support and interest. And a whole lot of, I mean, we could draw a map of all of us with the lines in between each of us, right? There's a collective story. I really want to document this. These are stories that we need to write down and say why they're important, because I think the question arose from the Zimbabwean deputy minister yesterday. Like, how do we make it work? And one of the things that you were saying was how critical the role of government is, not necessarily in receiving the money, but in creating an environment in which that money can be placed to someone else so that you're secure it's going to be fine there. I've heard lots about innovation and catalytic. David, you said the thing that you really like is when it goes mainstream, when that becomes the thing that we just take for granted, which I think is what we're trying to achieve, and when it lasts beyond you, as you said. I want to let the audience. We're going to do just a 3 questions. Can I do that? Will you allow? We're going rogue here. 3 questions, but we're going to keep the question short and the answer short. But Jess, are there any questions in the room for our panelists? Yes, ma'am. Please introduce yourself. You can borrow my mic.
Thank you. Question for the AFDB. Thank you very much, sir. I just have a very quick but possibly controversial question. But what is the purpose behind you wanting to fund specialist, institutions in the various, African governments or African countries that you might advance funding to via their governments instead of going direct?
It's actually not a complicated question, right? Because so I'm AFDB, I sit in Abidjan, I have my country office, right? There's a limit to how much I can do in any given country for a variety of different reasons. So when if a government comes to me, for example, and says, agriculture is important, I want you to help me set up an agricultural development bank. I want you to lend money, to give me money to put in as equity. I get much better leverage on that money for the agricultural sector in Tanzania than if I were just to use that equity to do a direct loan, even to a bank, to lend to agriculture. It's as simple as that. That money that we put as equity, and actually in that instance, it's not even our money, it's the government's money, can be leveraged many more times. If I were to do so, let me break it down this way. If I have 100 million, right, I can do 100 million credit line to Habib, right? Or I can put 100 million to Habib as equity. If I put 100 million to Habib as equity, my 100 million has already become 400 million, because I will not do more than 25% of anything. So out of 100 million as equity, I'm getting 400 million versus 100 million credit line. The 100 million credit line will have a lifeline of 10, 15 years. After that, it's finished. My equity investment continues. So it's really just the economics. Does that help?
3 questions. Carry on if there. I'm looking for another question, either for Habib or for Debbie. Any other questions?
Thank you. My question is specifically directed to South Afrique.
Wait until after.
To Habib. Yeah, I just wanted to check. I used to understand that South Afrique specifically finances affordable housing, but you also spoke about the urban development and also student accommodation. What sort of portfolios, maybe you can clarify further, what sort of portfolios do you fund? If we talk about urban development, do you also fund like warehousing, commercial properties, roads, and others? Thank you.
Yeah, no, thanks for the question. You know, in our new strategy, since we came on board this January, when I took the new role at Shelter Afrique, the idea was to say, you know, how do we really make a lasting impact in the sector? Okay, we've seen in many countries where people actually have built homes. Governments have these large-scale housing programs, but you don't have any trunk or basic infrastructure, right? So homes are built, but people cannot move in because you don't have the infrastructure. So it's really important. It's not just about the four walls. It's about really, you know, creating a livable environment and community. So that's how we see our role. It's about affordable housing and urban development, right? Because you need those basic infrastructure, even the social infrastructure that goes with it, right? Are needed. We're not gonna go and decide to just build a road anywhere. No, it has to be in situ, right? In a development area where you need to have access to roads, electricity, water, sewage that are required for proper developments to happen. I mean, one thing that I really appreciate in countries like, I'm sure maybe Namibia is the same, but Zimbabwe, where I've seen it, right? You cannot start a development until you've gotten all your permits in terms of trunk infrastructure, right? That's extremely important. That's how you avoid, you know, these, unplanned development and slum developments, right? So you really need to have that. So that's why we have it as part of our mandate as well.
Thank you, Habib. Thank you very much for the question. One more question for Debbie. Anyone with a question for Debbie? Otherwise, I've got one. Oh, there's
Hi, thank you.
Wolf.
Yeah, Wolf, founder of Easy Housing. I'm a startup in sustainable affordable housing, and I love what you're doing, but we see a big gap for like money for innovation. Like the DFIs typically have huge ticket sizes, which are hard to access for startups or scale-ups that can drive innovation. So, how do you look at the role of DFIs in bridging that gap for financing innovation at maybe like a $1 million or smaller ticket size? Thank you.
Thank you. Yeah, it's an interesting question. We do smaller loans, and I've tried to work with smaller developers with not a lot of success. I think it just comes down to capital and general capacity. You know, kind of biting off more than they can chew is usually what the issue is. So I do think there's a need for capacity building with developers, especially if we assume that the DFIs, and pretty much heard the same story from everybody this last couple of days, that the DFIs are really interested in making a difference and being involved in this sector. So if we're going to do that, I think we need to make it easier to work with us. We need to make the transparency issue is really important. Every deal is bespoke, so every transaction is going to require, you know, tweaking to meet the needs of each entity, each country, each market, and we do that. But on all the other issues, the policy issues like environmental compliance and social, economic compliance, there's now client protection principles that would apply to mortgages and rental housing, the whole affordability issue, the green agenda. There's so many things that a developer has to think about in order to get money out of a DFI that it's not their core competency. So it is something that we've been talking about, those of us, you know, behind the scenes, we've been talking about how can we do that? You know, how can we work more effectively with smaller local developers to build that capacity? Because honestly, I think that's the only way that you're going to get the kind of scale that you need here is mobilization of the full spectrum of developers. Happy to hear any ideas that anybody has on that subject.
That's brilliant. Me too. Very important topic for conversation. I want to thank the three of you very much for also for sharing with the madness of this time slot and conversation. But I really, really appreciate it. Thank you. And we'll carry on the conversation into really into the evenings and days.